The Austin 2024 housing market is going to do this. Jeremy at the Night Group, your favorite Austin realtor. Look, the January numbers just came out, and there's some really interesting things that I want to talk about the January numbers, things that you don't necessarily see in the raw data. We're going to go through that. First, I want to talk about this. I went the other day to kind of an elite men's group, right? So we're talking about high net worth individuals, people that are in the commercial buying space, they're in the residential buying space, they own service industries and service companies and all of these things. We're talking high net worth individuals, and they had this mastermind. And I listened to what they were saying about what they're expecting in the market, what they're seeing, what they're waiting on, what their concerns are. And I want to share a little bit of that with you about what we had in this meeting. It was very eye-opening. So you're hearing the people that are doing all the major investing here in the Austin area. Like, I'm going to give it to you right here. So one of the things we talked about is they're looking at the market and they're saying the average consumer is sick. Now, what they mean by that is that if you look at like American Express is taking on a lot of debt, right? So consumers are taking on a little bit more debt than they were, during the pandemic. A lot of that equity and things that people had during the pandemic has kind of gone away. And so the average consumer just doesn't have as much stuff. It really was interesting as they were talking about is how the inventory of most goods, people are now going out and buying clothes again. They're buying, goods that they need inside the home. They're not necessarily buying things outside of the home. So you're seeing some weirdness in the market. Now, we just heard the other day that the Fed basically said, hey, we're not going to lower rates anytime soon. Well, a month ago, we heard that rates were going to be dropping. Every single realtor I know ran out and said, oh, rates are going to be at 5%. Here we go. The market's going to be amazing. In fact, even builders, the builder confidence actually went up. What's crazy to me is the builder confidence usually tracks what builders see in the market and their confidence level. And 50 is average, is medium, right? Like not positive, not negative. They have been in the 30s, into the 40s, and now it's bounced up to 48. So all the news that rates were dropping, we saw builders have more confidence. The problem is that interest rates are now at 7.14. They didn't come down. The Fed is basically saying like, hey, it's going to be a while before we can actually cut rates. And so what a lot of these high net worth individuals I was speaking about or talking with, they were talking about how most investors, most people are putting their cash on the side. They're not putting it into the market. They're not putting it into buying properties. And so we're going to get to why this is important in the Austin market here in a second. So stay with me. But there's a lot of like pent up cash on the sidelines. So there's a lot of pent up demand. And this is what they were saying. All of these investors were like, we want to buy multifamily. We want to buy these things and these things and these things. But they don't know what's a good deal. And they were saying most common buyers, so a lot of high net worth realtors are in this as well. And they were saying, yeah, a lot of our buyers are kind of waiting and seeing right now. And the common theme with most of these investors was, this wasn't me, so don't say, oh, it's the realtor saying this. But a lot of them were saying like, this is the opportunity to really scoop up properties. And what we'll talk about with the Austin market is that one stat that came out is we didn't see a ton of inventory spike in January, but we did see a healthy amount. Again, I've been talking about this a while. We have more inventory right now than we have had at the start of January last year, the year before. At the start of last year, we had like 7,800 units on the market. Before that was like, literally it was like 1,800. This year we're starting out about 7,500 to 7,900 units on the market. So there's availability, but with rates so high, even some of these investors are going, unless I have cash to deploy and get this down even lower, I'm being cautious. One thing talking about cash, we were talking about the banks and what's happening with the banking. And what they were noticing is that people that own commercial real estate, that own buildings, that own some of these things, these banks were now asking for more deposits. So they were looking at the fact that banking is a little weak right now. A lot of these banks are saying, hey, look, you've reached a level, like let's say we valued your property at $10 million and you have a note on that. Well, now they're saying that the property is probably worth $8 million, which means that we need more deposits because we're not positive the delta that we need. Yeah, even though we've got this soft landing, that we're most likely still going to see a recession. We're talking some of the big players here in the Austin area saying, yeah, we still think there's a recession, and a lot of them are looking to buy a property. What that tells me is a couple things. The average consumer who's looking to buy a home is a little priced out still. The prices of real estate have come down. The median price in Austin ended up around the 535 mark. I'll get into the actual data here in a minute. That's actually higher than January of last year. So that December spike where rates dropped, we saw a spur of people buy. That's why the CPI, we had issues with the CPI, is so many people bought homes in December because we saw rates drop. And now we see rates at 7% again, and it's slowing down. And obviously the inflation numbers didn't look as good because everybody was buying homes in December. So think about that. If you're thinking about buying a home this year and you're waiting for rates to drop, you might get a better deal right now. And that's what a lot of these investors were looking at. Before I do that, what do you think about all of this? This channel, I try to give you as much good quality information as possible. You tell me in the comment section, tell me what you're seeing in the market. Are you one of those people that's maybe thinking like, hey, I can't afford things right now? What do you think is going to happen in the Austin market? I want to hear from you. Drop a comment because the Austin market is interesting. We had Nick Shaw on, and Nick Shaw said bearish, -2, positive, bullish, 2%. Which tells me what I said last year, that we'd end the market flat, and we did. In fact, it's wild to me. I look at the Austin Board of Realtors numbers, and they say we were down 2.4% in Austin and 4.4% in the MSA. Well, if you look at the Austin numbers in January, we're actually year over year positive. The MSA was actually still negative. It was a little bit down. So we are seeing some good pricing. Let me actually go through the numbers here with you real quick. Okay, one thing I want to point out real quick though, that I didn't just talk about was the fact that unemployment rate in Austin has dropped again. It's down to 2.9%. And that's also part of why the CPI is having issues, is that we have unemployment that keeps going down instead of up. They unfortunately need unemployment to go up in order for interest rates to drop, but unemployment keeps going down in the Austin. We're at 2.9, down from a high of around 3.6. So we're far down on that. So Austin economy, in fact, we've talked about the Austin economy, has actually been looking pretty good recently. So, and the economists in Austin are super optimistic as well. So how much is that just over optimism, or how much of it is true optimism? I don't know, you tell me in the comments. But here's the number. So the Austin market came out at 534, and they're saying down 2.8%. As you can see from my graph, it's actually up year over year. So I don't know why they did that, but closed sales, it says at 520. Now it's interesting when you go over to my chart right here, it actually shows closed sales were up a little bit for the Austin area. It's almost 100 more closings, pretty close, 70 more closings. So if you look at that, that's a good sign that we have more closings. Again, that is because interest rates went down like pretty rapidly. Now, other things to look at when we're looking at this is that new listings were down. I said that earlier, the inventory hasn't really come up as much. Now it's come up a little bit. If we look at my other chart right here for the Austin inventory itself is actually up. Overall inventory is up 2.9. Now, other things to look on here, inventory is at 3.2 months inventory. That is up year over year, so that's pretty interesting. Pending sales were actually up as well. So that's something to look at, but overall active listings is still quite a bit higher. Now, if we look at the MSA numbers, which is, the overall Austin numbers, 430,000 is down. That's the median. 430,000 is down compared to year over year, where we were last year at 450, we're down to 430, so down 20K year over year. But if you look at that compared to 2021, we are well above 2021's numbers. Now, keep in mind though, just because we're looking at 2021's numbers, 2021 saw a drastic increase from January, February, March, all the way through April. I doubt, you tell me, I doubt we're going to see a straight line increase like we did in 21 and in 22. In fact, if you look at 23, you saw a dip in February. Guess what? I imagine we're going to follow the same dip. We're going to follow the same line as every time interest rates go up or go down, we're going to have basically sales are going to be affected by that. Now, a lot of the buyers that we're working with right now are still running into multiple offers though. So we just put in 2 offers over the weekend and both were in multiple offers. We won one so far. We'll find out how the other one goes. Right now, that's cash, but that's good. So
We are still seeing, in fact, when I was at the event the other day, there was another guy who was talking about the fact that he had been in multiple offers on 3 offers he had written in over the weekend and missed out on all 3. So we are seeing multiple offers. Are they the same as what we saw in the past? Probably not, but we are seeing opportunity zones as well. So that's what we're looking at, the numbers overall year over year for Austin itself. We are up overall for the MSA. We are down. Inventories come up a little bit. Days on market has come up a little bit.
So what are your predictions for the Austin housing market? I do want to hear from you. Look, I think that this is obviously going to be a tough year because you have an election in the middle of this year and we haven't seen rates drop yet. They are still telegraphing that we'll see rates drop at the end of the year. But you tell me, what do you think is going to happen in the Austin housing market? Do you think prices are going to go crazy or do you think prices are going to drop? You tell me.